Afternoon, everybody. Welcome to the latest 360 webinar. As promised, we're going to start at 4 p.m. prompt, and the topic today is research and development, tax credits and tax reliefs. This is the third in the summer series of 360 webinars. All of the previous webinars are available to be viewed on 360 TV. You just need to go onto YouTube and search for 360 Chartered Accountants. The last webinar was on how to thrive in a post-COVID world, and the one prior to that was the COVID government support that's available to businesses. So if you didn't manage to catch them first time round, please have a look on 360 TV. So on to today's webinar. If you're not familiar with Zoom, the ways to communicate with us are you can either click the raise hand icon. Chloe, my colleague, will be keeping an eye out for those, and she'll interrupt myself and Andrew at the appropriate time. Probably the best way of communicating with us, however, is through the chat facility. If you just type in the question into there, then Chloe will ask it to the panelists at the appropriate time. Our agenda today is as follows. Hopefully Chloe will be moving the screen on shortly.
I've just pressed it. Yeah.
So I'm going to start with introducing the panelists and your hosts today, and then we'll be talking about the various R&D credits and reliefs, which sorts of businesses it could apply to, the types of projects that may qualify, and also the process that's needed in order to make a claim. We're expecting that to take around 25 minutes, so we should be ready for questions and answers at 4:30. If you do have any sort of confidential questions that you don't want to ask in front of the other attendees, then please feel free to send us an email to help@360accountants.co.uk and we'll get straight back to you. Or give us a ring tomorrow on 01482 427 360. So on to today's hosts and panelists. My name's Andy Steele. I'm one of the directors at 360. I'll be hosting the meeting today, and I'll be asking Andrew various questions, etc., and hopefully making sure everything runs nice and smoothly. Andrew Jordan's one of the managers at 360. I'll hand over to Andrew briefly to just introduce himself.
Hi, yes. So as Andy said, I'm one of our managers. I head up our research and development department and have done for a number of years. And yeah, so we're hoping to give you a bit more of an insight today into what makes a claim and who can claim, more importantly, and get rid of hopefully some of the myths and misconceptions that you may have or you may have heard about in the past.
Thanks, Andrew. And then last but not least, we have Chloe. Chloe heads up our marketing team. She's in charge of the technology and PowerPoint today. So if anything goes wrong, it's all her fault. She's sat in our sports boardroom today. So hopefully the shirt you can see over her shoulder won't offend any Hull FC fans, or fans of other rugby league teams for that matter. So if you just move on to the first screen, please, Chloe. And yeah. Andrew, I wonder if you could just start off by sort of giving us a brief overview of what research and development is in the eyes of HMRC, and a sort of a brief description of the tax reliefs that are and the credits that are available.
Okay, thanks, Andy. So yeah, I suppose most people will be familiar with the term research and development in itself, and obviously that triggers most people to think about labs and scientists in lab coats experimenting with chemicals and this, that and the other. And to some extent that is correct, but there's also numerous other businesses that can qualify because it doesn't just extend to effectively what you would normally consider research and development, because the research and development tax credit scheme, tax saving scheme, as you can see there, is basically a way of HMRC rewarding innovative companies who undertake a project that creates something different or creates a process that is different. So it's any kind of innovation in that industry. Now, in terms of which projects and which businesses can qualify, we'll come on to that in a short while, but how the scheme actually works and how the money gets back into a business owner's pocket, for example, is, as you can see on the screen here. So what happens is you would spend any amount of cash on a research and development project, whether, like I say, we'll get onto which ones qualify shortly. That money then gets enhanced by 130%. So like it says there, for every £100 that you spend on qualifying research and development expenditure, you're then effectively getting £230 worth of relief for that initial £100 spend. So it's very tax efficient from that point of view, and it's obviously great for innovative companies, and that means they can potentially offset that against their corporation tax liability, like it says there. So it means you potentially save tax at 19%. Or, as it says further down, you may be able to sacrifice that loss or some of that relief for a tax credit payable there and now, which is particularly important in certain industries. If you consider, a good example is always the video game industry. It's obviously, there's forever been new innovations, and you've probably seen all the Xbox Ones and PlayStation 5s coming out shortly and all this kind of thing. Obviously, they've all been in development for years. So without these kind of schemes, those kind of developers, those kind of businesses would probably struggle, because it means that they wouldn't be able to get that cash back, that tax credit back, whilst they're racking up losses, whilst they're developing the games. Effectively, their first pound of income might not come until 3, 4, 5 years down the line after starting the project. So any kind of help would be welcome, and that's how the tax credit scheme works, is that it actually gives you a payable tax credit from HMRC rather than having to offset it against your tax liability. Will give you that payable tax credit there and now, effectively, when you incur the loss, when you incur the expenditure in that period.
With Andrew, so without the R&D relief, they'd be carrying trading losses forward against future profits, and then ultimately, when they do make a profit, those losses would be knocked off those profits in calculating the tax. But as you said earlier, it can take many years for that to happen, can't it?
Definitely.
So
I mean, as you've hit on there, you can carry losses forward indefinitely as a limited company. So there's nothing to stop a business basically generating R&D tax relief, and if that takes them into a loss position, they can then, there's no risk of them then losing that relief. It will just carry forward indefinitely until they're in a position which they can utilise that by making a taxable profit in a particular year, a particular period.
And what type of expenditure can you claim, Andrew? I'm thinking, things like directors' remuneration. Can you claim that?
Yeah, definitely. That is one of the big ones often. So there's a limited types of expenditure that HMRC actually allow you to claim for. Now, directors' remuneration and other staff costs are very much one of them, and that tends to be the big one. So it's effectively anyone on your payroll who has been working on a particular project throughout a particular period, or particular R&D project, should I say. So you'd be able to claim a percentage of their time based on how long you think they've been spending on that project. So maybe that yourself, for example, if you were undertaking an R&D project within 360, or an R&D qualifying project, and you spent half your time in that in a particular financial year, to that cost, and then enhance that by 130%, and along with other costs. The other costs that are allowable are subcontractors' costs. So if you bring someone in from the outside to work on that particular project, you can claim their costs. Now that is at a slightly reduced rate. You can only claim 65% of the cost there. So if you spend, say, £10,000 on bringing someone in from the outside in a particular year, you'd only be able to claim £6,500 of that, but you'd still be able to enhance that £6,500 by the 130% and include that in your claim. The other types of expenditure allowable are software costs. So if you have to pay for particular types of software or subscribe to particular types of software to undertake that project, then the cost of that is allowable. If you're having to undertake trials, so obviously this doesn't tend to be in every business and industry, but if you imagine like the pharmaceutical industry, they'll be undertaking quite a lot of clinical trials, and I suppose at the minute it's obviously more prevalent than ever. So the cost of putting on those trials and the cost of getting people in for those trials is an allowable cost. Another allowable cost is prototypes. So effectively, if you're designing a prototype of something, so imagine you're an engineering company and you are wanting to design a new machine effectively that's going to overcome a particular challenge. If you're designing that for the first time and it's not then going to be sold on, all the costs that go into that are allowable. And then the other ones, which I suppose are maybe a little bit of minor costs, but it's any kind of independent research costs. So if you've had to go out and undertake some market research and get effectively boots on the ground, those kind of costs are allowable, and also consumable costs. So anything that kind of goes into any of these projects. So a good example is often light and heat. You can actually claim a small percentage of your light and heat. So say, for example, if you've got a factory, you can claim a percentage based on how much of, I suppose, staff hours are being used within that factory. So if 20% of your staff within that factory are working on research and development projects, you'd then be able to claim 20% of the light and heat costs as part of the claim as well. So then they're all grouped together and they form the expenditure, which you then enhance by the 130% to get the enhanced tax relief.
Okay. Obviously, a bit of a hot topic at the moment is furlough and furloughed staff. And I believe recently HMRC has clarified the position on furloughed staff with relation to R&D claims.
Yeah, so kind of as expected, really, HMRC have come out and said that any member of staff who was on furlough during a particular period, you would not be able to claim for their wage during that period as part of a research and development claim. And that also extends to the top up. If you remember, HMRC or the government were paying 80% of people's salaries, and then people had the option to top up with 20% of the normal salary. And even businesses have chose to do that. HMRC's argument, which has been upheld and valid, is that if this member of staff is on furlough, they shouldn't be doing any form of work for the business. So therefore, how can they have been doing research and development work? Which seems fair enough when you look at it. And yeah, it's just another little added intricacy which will form part of obviously claims going forward anytime from 1st of March really to now.
Okay, are we ready for the next screen? Sure, it'll change. So that sort of leads nicely on to what sort of businesses might qualify and what sort of projects would successful applicants be undertaking?
So yeah, any business can effectively qualify for the research and development tax credit scheme, which obviously is fantastic, and it kind of, I suppose, that dispels a little bit of a myth that only certain types of businesses might go through it. Like I mentioned earlier, like digital businesses, pharmaceutical businesses, any business that undertakes a particular project that meets HMRC's 4 criteria. Now, those 4 criteria, effectively, as it says further on the screen, what HMRC need to see from a particular project is what is the scientific or technological advance, what scientific or technological uncertainties were encountered during that project, how and when were the uncertainties overcome, and then why wasn't the knowledge already being sought by a competent professional in that field. So effectively what HMRC is saying there is it has to be a new development, it has to be a needed new development, a necessary new development, and it doesn't necessarily have to have worked out, but the need for that development has to have been there in the first place. So effectively we've submitted claims for all types of businesses, and HMRC have obviously accepted those claims as well. And it's businesses that you might not have also at first as well, which is obviously interesting.
Yeah, you've obviously listed a few of the types of sectors that our successful claims have been operating in. You've mentioned digital technology, pharmaceutical. I know we've done some for professional sports clubs around their sort of sports science projects. Yeah. You've mentioned publishing businesses. I mean, I know we've even done a claim for a coffee roasting business, which you might not think on the face of it would be doing R&D, but when you dig a little bit deeper, actually they were doing some really innovative things, and there was a claim available, wasn't there?
Yeah, I mean, the coffee brew was quite an obscure one, really, but it was a really interesting and good one to get through as well. And HMRC were happy with it. I mean, what that involved was were designing and implementing a new process and system effectively for roasting the coffee beans. So that was to enhance the flavour, but also to cut wastage throughout the process. So therefore, there was obviously a lot of trial and error involved, and a lot of the consumable costs, which I mentioned earlier. And obviously quite a bit of time went into it as well, and actually researching different ways of doing things and things that maybe wouldn't have been done together. And managed to compile a claim which, like I said, HMRC were happy with, and it was very much a valid claim as well, because they were, like we said earlier, they were undertaking new research to achieve a different outcome to what's already been put out there within their industry. So yeah, that was a really good one.
Yeah, they were looking for ways to make their business more efficient, weren't they? And a big part of the government's push towards encouraging businesses to invest in R&D is making the UK more efficient, because at the moment we're lagging behind some of our global competitors, aren't we?
Definitely, yeah. I mean, it's been talked about before, there's a bit of an efficiency and productivity gap within the UK. So this is why the scheme is in place, really. HMRC and the government want to encourage businesses to be as innovative as possible, so that first of all they can show the rest of the world we are innovative, come and invest in the UK, but also because it doesn't really do anyone any good having waste. I mean, in that particular example, having to waste obviously precious resources, it's not doing the business any good. It's not doing the end consumer any good, because they're effectively having to pay more for less of their product.
Yeah.
So yeah, there's a lot of benefits to it, and that's effectively why it's there. It's there to encourage businesses to be innovative and overcome problems in a different way that hopefully saves them time and money.
Thank you. Shall we move on to the next screen, please, Chloe?
Yeah.
So do you just want to run through some of the, as it says there, some of the common misconceptions, and how many businesses do we think are carrying on R&D activities, and what sort of take-up of these schemes had to date?
So yeah, I mean, I think we've touched on a few of these misconceptions already. I mean, in terms of numbers of people, I mean, there's been, HMRC estimate that there's between 150,000 and 200,000 basically R&D relevant businesses that are undertaking R&D qualifying projects. Now, when you consider that there's only actually really, I think, I'm not sure on the exact figure because the data is actually always about between 1 and 2 years behind, but at one point there was only about 20% of those were being utilised. So that's between about 30 and 40,000 businesses making claims in a particular year. Now, when you consider that HMRC are expecting 5 times that amount, it's obviously, there seems like there's no better time to be putting a claim in. So in terms of the first one, the first misconception we found here, saying that you can only claim if you invented or formulated something completely new, that isn't really correct. Obviously, that is very much one element of research and development, but any business that is modifying or improving an existing product or service within the marketplace is then eligible to claim. So obviously, it also extends to processes, which means if you're tweaking your process to come to a slightly different outcome, any time, any effort, any money that has been spent in there is all part of effectively a research and development project, because you are spending that time, spending that money to overcome an uncertainty. And basically the uncertainty would then lead to a potential time saving or a cost saving, something that isn't already there, isn't already off the shelf, I like to call it sometimes. So something that is a new kind of development, but not necessarily a whole new system or a whole new product, effectively. The next one, so we can't claim as we're only a small business and we're not in a common R&D industry. As we said, any business undertaking a qualifying project, so any business that is undertaking a project that can tick those four boxes that we mentioned earlier from HMRC about overcoming uncertainty, basically identifying a scientific or technological uncertainty. And also, being a small business, that's actually the most beneficial for putting in an R&D claim, because as a large company, you can only use what's called the large company scheme, which is much less tax efficient, but there's still obviously savings to be had there. But the small and medium entity tax credit and tax savings scheme is really, really tax efficient. Like I said, you're getting 230% tax saving on 100% worth of the cost. So it ends up only really costing you about half of what you're actually spending on research and development, because you're getting the other half back in tax saving. The next one, so there's no point in our business claiming is we've not spent any money on our R&D projects, only time. As you've probably picked up earlier on, it's not necessarily the case. So if there isn't any physical costs, if you've not spent any actual cash on research and development, or what you consider to be research and development, it may well be that you've put a lot of time and effort from your team into that claim. So like we said, there's then scope there to bring in a percentage of their salary and costs, because it's not, as well as the salary, you can also claim for the employer's national insurance, your employer's pension costs. So obviously all these little add-on costs that go with people's salaries, they all form part of the claim, and they'll then get enhanced to 130%. So it's obviously that can lead to a substantial tax credit or tax saving, just through basically people who you were paying anyway, but you've just identified that they were undertaking relevant projects. So another one which we have heard quite often in the past, is that our business makes a profit every year. Surely we're not entitled to claim research and development reliefs, because people probably think along the lines of the example I gave earlier about the video game industry, that you've got to be developing something for a long time and you can't be making a profit. If you're making a profit, how can you be developing something? But it's not true. Like we said, you can claim the tax relief rather than the tax credit. So you can effectively claim that enhanced expenditure against your profit as such. So you can decrease your profit, which obviously means decrease tax. But the important point is that's without decreasing your company's reserves. So I've had a few people say in the past, oh, well, is the enhanced expenditure, is that going to reduce my reserves? Is that going to reduce my facility and my ability to potentially take dividends out of my company? That's not the case, because the enhancement actually goes on to the company's tax return. So again, I'm slightly worried about getting a little bit technical here, but it goes on to the company tax return and reduces the profit on there. So it doesn't actually touch the accounts as such, apart from reducing the tax in the corporation tax figure in there. So it goes on to the company tax return, which then in turn gets submitted to HMRC, and that's where we would pull together a report, basically identifying those 4 areas which any project needs to fulfill, and also identifying the calculations behind the figures. So yeah.
Okay. Do you have to be a limited company?
At the moment, yes, because effectively it goes on a corporation tax basis, so there's only facility to save tax through the corporation tax regime.
Yeah. Okay, next screen, please, Chloe. I've got some questions. So at what point should a business make an R&D claim?
So there's nothing to stop a business thinking about an R&D claim at any point during any year, and obviously the earlier you start thinking about it, the better. So if you're undertaking a particular project, start identifying that early on is great, because then you can keep on top of the costs that you're spending on that project, and you can make sure that you're kind of accounting for every pound then and getting real value from each claim. Because when it comes to the end of the year, you're speaking to someone like us, we'll be able to come in and you'll be able to say, I've spent this, I've spent that, and there'll be nothing, there's no chance of anything being misspent. In terms of when you should be making the claim itself, so that is at the end of the financial year, once the figures are finalised. So normally get to a point where hopefully 1, possibly 2 months after the end of the year, you've been talking with your accountant, the figures are finalised, effectively the taxation's finalised, and then that's when for example, I would jump in and start looking through the claim, start identifying the claim, identifying the costs behind the claim, and putting the report together, because then if you start doing it straight after the year end, identifying costs, there's always a chance, as you'll know, Andy, when costs change in with accounting adjustments and there's potentially late invoices, things like that. So you always want the figures to be finalised effectively, but not filed before you put the claim in.
And that's the company's financial year end, isn't it?
Yeah, that's if a company has a 31st of March year end, for example,
yeah.
Hopefully we start to look at the accounts mid-April, mid to late April. So then if they're finished by the end of April, the start of May, that would be the perfect time to come in and start looking at making the claim and putting the claim together.
So are there any sort of deadlines? You know, is there a time limit as to how late you can do these claims?
Yeah, so effectively you have 2 years from the end of a financial year. So like the example I just used then, if you had a 31st of March year end, you have 2 years from the end of then to submit an amended, well, to either submit the claim, or if you've already submitted, this is another kind of common misconception really, if anyone's already submitted their company tax return, you can actually go back and amend it. Now you've got a period of 2 years at the end of a financial year, like 31st of March, to amend a return then. That then include the research and development costs. Now, if you've already paid tax, for example, and the research and development claim is reducing that tax, you would then get the difference back from HMRC, assuming they accepted everything and it was okay. So if you, say, for example, had a 31st of March 2020 year end, you would have until 31st of March 2022 to make any amendments or any claim, any amendments. So that's effectively the deadline for the claim is always 2 years after the end of that period for any costs incurred in that period, any projects undertaken in that period.
So if a company has a year end of 30th of September, right now, if they were quick, they could go back and make a claim for the year to 30th of September 2018.
Yeah, I'd encourage them, if they thought there was any kind of hope or scope for a claim, to get in touch. I mean, get in touch with us as soon as possible, because there's every chance we'll be able to look at and put something together and really try and push the boat on, get it done as soon as possible, really, because as you say, if that is the case, you're up against a ticking clock there. So
yeah, ideally before 5 o'clock today.
Yeah, exactly.
So how long does the process take?
It can vary. It quite often, because of the very nature of it, and because it's very kind of intrinsic within a particular business, it involves a lot of discussion. So between someone like myself and a business owner, a bit of discussion about the claim itself, so getting the wording right, because obviously I always consider the reports that we do in 2 parts. We would put together effectively a technical report that detailing the projects and all the various ways in which it meets the criteria, and then also the calculations and how we've come to the figures and that kind of thing, what percentages we've used for the payroll, for example. So if we had access to the figures, for example, you're talking a matter of weeks. It just depends on how long it takes for us to get the information we need, really. If we can get that all fairly quickly, we could have it turned around, like I said, in a matter of weeks. If that.
Okay. I'm running out of questions now, so I'm hoping any of the attendees that have a question, post it in the very near future. If you don't want the other attendees to see the question you've asked, if you just address it to the panelists rather than panelists and attendees, and obviously we won't mention any names either. In terms of the information that clients will need to give to us to do this work, I presume it's access to profit and loss accounts, invoices, time records.
Yeah, I mean, in an ideal world, I suppose
projects being undertaken.
Yeah, in an ideal world, we would have access to the financial software, so something like Xero, which obviously maintains people's accounting records, businesses' accounting records. We would then be able to identify where we think the relevant cost areas are and interrogate those nominals effectively, and then discuss with the business owner which ones which costs within there they think are relevant. We'd also be able to discuss the relevant payroll costs in there. And that also involves us ideally again having access to the payroll software that the business uses. Obviously now everyone's using payroll software because of real-time information that came in a few years back. And then we would also have access to the business owner or the key technical staff within the business so that we could discuss the claim with them and discuss the relevant criteria with them and how we're going to meet those criteria and kind of put together a technical report. Because where we admit we're obviously by no means technical experts on every single field that we come across, but we understand how to make those criteria, the HMRC's criteria, fit within a particular project or a particular business's project within development. There's also an element of, in an ideal world, a business would keep effectively project management software. Now that's obviously the perfect way of identifying who has worked on a particular project and for how long. So if they had project management software, they would be logging hours almost like a timesheet basis to particular projects, so that at the end of the year they could run the report that says X member of staff has worked X number of hours on X project, and then we would basically do a calculation based on that number of hours versus their number of hours worked within the business, and that would effectively give us our percentage of how much of that person's costs need to go into that particular claim.
Do many businesses keep in their profit loss accounts? Do many of them keep a sort of a separate line for R&D expenditure just to make our lives a little bit easier at the end of the year?
Not often, no. It's not really, I suppose, an accepted cost really, because HMRC would still argue that individual cost, although it might be R&D relevant, research and development relevant, is still particular costs. So say, for example, if you had payroll costs, it's still payroll costs. I mean, the best way of doing it, for example, if you're using a software like Xero, would be to have what's called a tracking category, so that behind every invoice or every payment, you can identify it as a particular project. And then at the end of the year, you can actually run a report which pulls off tracking categories and pulls off how much has been spent on a particular project, and then how it's actually broken down, so that's between payroll, software. And then that would be a kind of another ideal world scenario, and that's something we try and coach our clients to do, because obviously it makes our lives a little bit easier, and it helps them, because every time it's a lot easier for them to identify research and development expenditure when they actually incur it, as opposed to potentially 6 months down the line when we're having a chat and they've had a few sleeps. So
good tip that. I can see somebody's asked the panelists what are our prices for this work.
Yes, I mean we operate effectively we like to think it's a very transparent fee model. So we work on a percentage basis of the tax credit or tax saving that we can achieve for a business. And that's also on a no-win, no-fee basis, which we think is quite important, because we think that this takes away any risk or potentially costly fees that might be associated with an unsuccessful claim, and might be seen as a bit of a hurdle or a reason not to go ahead with a claim by a business owner. And then using us also obviously gives peace of mind to the business owner that they've experienced professionals dealing with the claim. So that's the best possible chance of success. And that even if it doesn't succeed, it's not costing them any cash, because effectively we only get paid if they get paid, or if they get the tax savings, tax credit. So yeah, that's the way we always choose to do it, because we think it's a fair model, and like I say, we also think it's a kind of risk-free model for a business owner. It gives them the best possible chance of actually making a claim, whereas if they were thinking that they were going to get charged either way, it might put them off making a claim, and that's obviously not what we want to do. We want to be encouraging as many people, as many business owners as possible to be looking at making claims, because effectively it's unlocking the free cash within their business, which obviously at the minute is more important than ever, as businesses are obviously fighting to, in some cases, keep their head above the water. So
yeah, and cash is king at the best of times, but right now it's never been truer. We've got through that's 5 minutes without mentioning the dreaded B word. obviously we think Brexit is imminent at the end of December. In terms of the long-term prospects for this very generous tax relief, can you see it carrying on for some time? Do you think that in a post-Brexit world, when we are presumably trying to encourage businesses and perhaps foreign businesses to invest in the UK, do you think that's going to encourage the government to carry this scheme on for the sort of foreseeable future?
Oh, 100%. I mean, I think you've almost answered your own question there, in effect, haven't you? It's a very generous scheme, and it's a very attractive scheme, and it's a great kind of scheme for the government to hang its hat on and say to the world, look, the UK is open for business, the UK is a vibrant, innovative economy. Please come and invest in the UK, invest in the talent pool that's within the UK. I think any kind of backward step with R&D would be seen as a bit of a negative message, really. And again, that kind of thing would reverberate around the world. So in a post-Brexit world, when I suppose the UK's relations with other countries is going to be more important than ever, as it's not going to be part of a trading bloc like the EU as it is now. It's going to be negotiating independent trade deals. It's going to be trying to attract business to the UK that's not within, say, the EU and the free market. It's going to need plenty of incentives. It's going to need plenty of encouragement from the UK government to get that investment into the UK. And there's nothing better at the minute than being seen to be a really innovative economy, which obviously everyone within it likes to think that we are, and it is vibrant, it is innovative, but it's something that the government then have at the end of the day to say to the rest of the world, because they have the statistics, if I can say that right, to shout about. Yeah.
And then just sort of with a nod towards COVID, there's obviously a lot of speculation about imminent tax increases. Talk of corporation tax being increased from its current low level. I suppose if corporation tax rates are increased, then that makes these R&D claims even more attractive, doesn't it? Because you're then getting tax relief at 20% rather than the current 19%. So perhaps that will focus people's minds if that does happen at the next budget.
100%, yeah. And I mean, again, I can't see them. You never know for 100% certain, but I can't see them changing anything about the R&D scheme negatively anyway. I can only see it increasing, so that it may even be that it gets more generous over the years if they do increase corporation tax rates. That to the rest of the world is potentially seen as a little bit of a negative and a little bit of maybe a barrier to entry for some foreign investment or foreign companies. So to counteract that, they may want to encourage even more innovation and even more companies to take on projects that they maybe otherwise were a little bit on the fence about, by increasing the potential cash that they might be able to receive from it or save.
Yeah. So I guess this is a last shout for any questions that anybody may have. As I said earlier, if you want to do it on a sort of confidential basis, then please send an email to help@360accountants.co.uk and we'll get straight back to you. You have to just flip it onto the final screen, please, Chloe. If there are no more questions, then I guess it's just down to me to thank my fellow panelists for the help in not only hosting this meeting but also arranging it. The next webinar is on the 14th of October. It's the subject next time is charities, and we've got a guest speaker on there who will be talking about the issues that charities have experienced during lockdown, COVID, etc., and also some of the innovative things that some of them are doing to replace lost income. Our next Saturday surgery, which currently is virtual for obvious reasons, is on the 3rd of October, and it's on startups. So if anybody is thinking about starting up in business or knows anybody that either is or has done recently, then please get in touch with events@360accountants.co.uk for the details of the joining instructions. I hope everyone who's attended has found this useful. I hope everyone who's watching the webinar on 360 TV has learned something and has got the cogs turning and thinking about whether or not anybody's undertaking any projects that might qualify. Andrew, I guess you're more than happy to field queries about, if a particular business is doing A, B, C, do we think that might qualify? I guess you're more than happy to look at queries like that.
Oh, by all means, yeah. If anyone has, even if they think it's completely ridiculous, just drop me a line. I mean, drop me an email. My email's andrew@360accountants.co.uk. Just drop me an email and I'd love to have a chat with you, or maybe arrange a call or something on those lines, and yeah, just talk about it. It might be that it's something you've had maybe burning away in the back of your mind for a few months, a few years, and you just maybe want a bit of clarification on it. Either way, I could definitely help and would love to have a chat. Love to hear from you.
Thanks, Andrew. As ever, we'll be sending all of the attendees feedback forms. It'd be really helpful if you could fill those in. If there's any subjects you'd like us to talk about in the future, please let us know. If there's any room for improvement on either the build up to the webinar or the actual webinar, please let us know. If you think everything was perfect, then please leave us a Facebook review or quick post on Twitter. That would be much appreciated. And I hope to see some of you on the 14th of October for the next one. Thanks, everybody, and goodbye.
Thanks.
Everyone.
Bye.